Lessons and observations from a historical look at Canada's national debt growth. In this video, we will look at history at the growth of the national debt during periods of calm and turbulence. Let's see what observations and lessons we can glean from a historical look. In the year 1867, Canada begins and has a debt of $75 million. For the next 46 years, the country's leaders focus on establishing a railroad connection to Western Canada. A railroad connection would allow for more areas for new immigrants to settle after arriving. It is relatively peaceful, and the only official conflict is Canada's participation in the South African War between 1899 and 1902. The 8 different prime ministers feel that this is very important to establish Western Canada and add to the debt. From inception until 1913, they increase the debt at a rate of 3.17% per year. Canada is hit unexpectedly with World War I, the Spanish flu and the Great Depression. This period is the most challenging in Canada's history. These trying times lead to the need to finance deficits. There are 6 different prime ministers during these 25 years. To pay for the war effort, income tax is introduced. To offset the depression, large-scale social programs are introduced. The growth of the national debt over these 25 years represents an annual increase of 9.59%. 1939 brings the unfortunate reality of World War II. This is a time of significant spending to support the war effort. But there is also additional economic activity in Canada as the UK and other countries are interested in Canada's manufacturing abilities and raw commodities. The added economic stimulus does not match the spending, and deficits lead to an annual debt increase of 20.3% per year from the 7-year ending in 1945. The single prime minister during this time also leads the country to adopt unemployment insurance. After World War II, Canada enjoys a time of relative peace and prosperity until 1970. We say relative peace as Canada was still involved in the Korean War but mostly avoided the Vietnam conflict. In the decade after World War II, the Canadian leaders acknowledge that income tax will become permanent and high taxes are necessary to reduce deficits from the war. During the 1960s, there is a philosophical shift in leadership, and Canada starts social programs for retirement, healthcare and student loans. During 26 years with 5 different leaders, the national debt grows at a modest annual rate of 2.37%. The prosperity turns to the challenges of high interest rates combined with expanded spending to support new social programs. This is also a time of regular changes in leadership as Canada has 6 prime ministers in 26 years. Capital gain tax is introduced but does little to offset high interest rates and the continued role of social programs for education, health, and retirement. The increase in the national debt is noteworthy as there are no health pandemics or major wars excluding Iraq. During the period between 1971 and 1996, the growth of the national debt is annualized at 13.98%. Prosperity fueled by falling interest rates, increased free trade, and rising commodity prices are combined with a political mandate to lower the national debt. There is also limited spending on new social programs. This is combined with relative global peace except for the other conflicts in Afghanistan and Iraq. For the first time in history, Canada reduces its national debt during 3 prime ministers' leadership. During these 11 years, Canada's national debt falls at an annual rate of 1.5% a year. The period of prosperity ends with the start of the Great Recession in 2008, which included falling commodity prices. The political leadership that focused on lowering the national debt now has no choice but to increase deficits once again. There are no health pandemics or major wars, and by 2015 the country has mostly recovered from the Great Recession. The federal debt increases by 3.4% a year during these 8 years. In late 2015, new political leadership in Canada became more focused on additional social programs and being a good global citizen. The other international and domestic spending increases the debt at an annual rate of 3.2% a year for the next 4 years. This is a time of relative stability and economic prosperity. As the end of the decade comes in 2019, it seems like the future is bright for the coming decade. The COVID-19 pandemic strikes Canada, and all levels of government are quick to step in and provide social support structures. An enormous amount of funding is put forth to support Canadians while the country fights the COVID-19 pandemic. For the first time, the national debt goes over $1 trillion. The one-year increase is a growth of 40.1%. The COVID-19 challenges continue in the year 2021, and the federal government's conservative internal additional forecast spending on COVID-19 recovery and social programs predict an increase of 9.1% for the year. Another expenditure will be set aside for a national child care program, and it appears that the National Health Care Program may require additional funding. It is impossible to expect how challenging economically the rest of 2021 will be, and many economists predict that the spending requirements could be much higher. Going forward, the federal government's conservative model expects the debt to increases from the year 2022 to 2025 at a rate of 5.7% a year. There will be additional money spent on the rollout of new social programs and continued recovery from COVID-19. It is difficult to estimate how the recovery will go, and there is always the potential for unexpected challenges. After studying this part of history, I have made the following 4 observations. 1. World War I was the most challenging in history as it included a world war, a depression and health pandemic. Yet this period had less national debt increase per year than the periods covering World War II, the 1970s and today. The reason for this is the lack of established social programs and the introduction of income tax. 2. The period of World War II was much more severe for debt increase than our present time. In 7 years, Canada's national debt increased by 365%. COVID-19 estimated period of recovery includes 6 years from 2020 to 2025. If the federal government estimates are correct, the national debt will increase by 192%. 3. The period of 1971 to 1996 had extreme growth in the national debt, followed by the only one period when the national debt fell in value. This rising and falling were mainly correlated to interest rates. One of the most significant influences of increased or decreased national debt is the interest costs to service the debt. 4. Challenging periods like World War I and World War II afterwards had permanent increases in taxation. Based on the above observations, I have found the following lessons from history. 1. Like other periods of tremendous debt increase, higher rates of future taxes are expected. 2. The most significant future risk of a rising national debt is higher future interest rates. 3. Wars and future health pandemic are impossible to predict but are a secondary future risk compared to rising interest rates. Thanks for listening to this presentation. Please take a moment to like our video. The end.